All right, here we are. Welcome, guys. Welcome to another live stream with me, Libs42, and Dirk Hartig from PrimeXBT Academy. How are you doing this fine? I got to check my watch. It's Wednesday.
It is Wednesday, yeah. So the day after tomorrow, so to say,
Oh,
after
yeah.
the economic explosion we saw yesterday in terms of
Yeah.
of release of the inflation data. Yeah. So I'm doing well. I got shaken up quite a bit, honestly speaking, by the numbers yesterday. Had to reposition quite some stuff I have there in swing trades, but yeah, you know, this is what trading is about. You have your hypothesis, and then you adapt to reality again.
Yeah, speaking of being shaken up, I got my electricity bill yesterday as well as the CPI data release. I think it's over 3 times more expensive than this month last year. So it's going to be, and it's not even winter.
What do you guys like pay per kilowatts hour there now? Do you know that?
Why I can't remember, but I think it's in my currency is about 3. It's up to 3 Swedish kron per kilowatt, and that's
what is that, by 8.5? I think in euro or something. No,
not 8.5. 8.5 is I can't remember if it's kilowatt or maybe I'm way.
So like around 40 cents, probably euro cents. That's steep already, man.
Anyway, let's not talk about energy crisis. I'm just gonna get depressed. But you know, I'm thinking a lot about it. I mean, I do like, especially with the CPI numbers coming out, because I remember we had our last live stream. We talked about how you saw a potential scenario where if inflation started peaking, that might be when the bottom of the bear market was starting to form.
Yeah.
And the more I thought about that, it made sense, right?
And it still does.
Yeah, absolutely, it still does, right? And I still believe that is probably what we're going to look for. The problem with the data release yesterday showed us that that's not the case. So,
yeah, in a certain way, yes. I mean, could you maybe activate my screen? Then
maybe you can talk about what do you think about that? And
so first of all, I mean, let's start here in the beginning. What we saw yesterday was actually problematic in 2 ways. First of all, we had the inflation rate coming in a little bit higher than expected, and that's of course something the market never likes. So forecast 8.1%, came in at 8.3%. Still, what we are seeing, it's lower than the one we saw last month with 8.5%. So that's still good news, although of course the market didn't like it because the market doesn't like negative surprises. Still, it's nothing like in the long term that really concerns me. I think the way the market reacted with really this huge risk-off move we saw yesterday again. Yeah, we saw stocks really on a grand sale, like a Black Friday, you know, where everything is on sale. We saw, of course, crypto getting hammered again. We saw the euro dollar dropping like a stone again with below 1.0. I think there must have been a move in tops of like 200 pips or something we saw there. The problem here is this core inflation, which came in higher than forecasted and also higher than we saw last month, because this core inflation is actually the inflation the central banks are looking at least in the USA, because it measures the inflation by a basket of goods, and this goods excludes something what they call here volatile food, and especially fuel costs. Both fuel costs, like everywhere or almost everywhere in the world, of course, energy costs in general. I mean, we just had this example with you, Lib, are the main driver of inflation, especially here in Europe. So this is what the Fed is looking at the moment, core inflation. And this does now 2 things. It will for sure lead, I'm almost 100% certain about it, that we're going to see an interest rate hike, I think it's next week, of 0.75%. And even worse is what the market kind of was expecting is, hey, if inflation now gets better, if core inflation gets better, we probably would see in 2023 very soon the Fed lowering the interest rates again. And now with this data, it seems like, it hints a little bit into the direction of what Jerome Powell said last time. Maybe inflation is going to stay higher. Maybe interest rates have to stay higher or at a higher rate longer than expected in order to fight this inflation. So maybe we are not like in the first quarter or second quarter of 2023 already seeing decreases in interest rates again, which would be very good for stocks, makes crypto more attractive again as a risky asset, so to say. But maybe we are going to see those heightened interest rates for a longer time. And this is, in my opinion, at least really what drove the market down there yesterday. Now, still, if we look at it, where's my long-term chart here? Yeah, here we go. If we look at it like very, very long term, we still can see here, so this chart goes all the way back to 1970. Every time inflation comes back, and I mean, I've talked so much about this chart really in the past weeks, we are at or close to the market bottom, with the exception of 2008, that is. And we are still seeing inflation declining. So we're at 8.3%. We weren't higher than 8.5%. That's a good sign. However, maybe the finding the bottom might take a little bit longer. And you guys maybe remember that I was always, talking about this election pattern that I noticed first 2 years under Trump, first 2 years under Biden. That means after the election date of both, where I said there's still the possibility of a local bottom here about 332 days after the election, which would be, in my opinion, somewhere here between 3,400 and 3,600 points away. I was yesterday actually a little bit gambling into the direction that I thought, hey, maybe inflation data is coming out better and this is not going to happen anymore. We saw the bottom already. Now with the new world order, so to say, what we're seeing, especially this core inflation, I find it quite realistic that we are going to see another bottom there, which, as I said, might be somewhere here around 3,400 to 3,600. I labeled it as a soft landing here. So this is a chart actually I did last Friday. Not so bad here with, I said we are going back here. We're going to probably make a new lower high, which we did a little bit earlier than I anticipated. So yeah, we are probably on our way down again now. All depends on what the Fed is going to do next week also.
Yeah, I know. I'm like every day I'm going through the news and I'm watching different news channels for to get an idea of what the experts are saying and thinking and what the traders and institutional traders are actually talking about when it comes to the market. And some people are of the opinion that the Fed is saying the things they are saying because they need to, but in reality they're not really going to do what they're saying, right? Because that's the opinion of some people. That's not my opinion. I think it's very, very clear what the Fed is doing. The speech in Jackson Hole was very, very clear. They are going to hike rates, and they are going to hike rates well after most likely inflation has peaked, and they will not stop, in my opinion, until they know that it's not too early, right?
Yeah.
They've been very clear about that. Now, we know that they can go a completely different route. I mean, they can change tomorrow, but from what we see right now, it's fairly certain that we are going to see central banks continue their tightening until they're sure that they have inflation under control. So it might be we might now be, because of the news event tomorrow. I mean yesterday, we might now be again in the phase where we're looking for lower targets, and the targets that you're watching on your chart right here is a very probable target, in my opinion, at least in the current condition.
Could be, and also remember always, it's like when you, as a central bank, when you raise interest rates, you are not having an immediate effect on inflation. There's a delay, of course, and the delay is not like, oh, it's a week or two until we see effect. We're talking about delays of maybe half year to even a year. So until we see, for example, the last interest rate hikes we saw now from July, August taking effect, we actually might be, you know, in Q4 2022, so December 2024, or maybe Q1 2023. And a lot of stuff can happen until then.
Yeah. I just want to remind you guys to give Dirk a follow. He's on PrimeXBT Academy on YouTube, and also at PrimeXBT_Academy on Twitter. So definitely give him a follow. Lots of good educational content. And if you like what you're seeing, remember to hit that like button and subscribe to the channel if you want more stuff like this, where we're trying to give a good mix of technical analysis and an overview of the macroeconomics. With that, I kind of want to go back to CPI, because I've been getting a lot of questions on what is CPI and why is CPI important. And the reason why CPI is so very important is because it's gathering a lot of data, right? So across the US, it's gathering a lot of data. I've looked it up, and the current weighting of the CPI is about, I think they look at 24,000 retail outlets, which is pretty big, and they look at a 80,000 different goods and services, which is a huge number, right? And it's also important to note the difference, like you said, the difference between the CPI and the core CPI. So the core CPI is you don't have food and beverages in the core CPI, because they are affected by production cycles and weather effects. So if there's like a bad month for the crops, that's going to be raising prices. And if it's a natural catastrophe or hurricanes or stuff like that, that's going to affect the production cycles and stuff like that. So core CPI is very, very important, but it's quite simple. It's basically measuring a huge number of goods and services across America, but actually only in the urban areas.
Yeah.
But still a lot of data, so that's why it's very important. That's why it's a major. And in the current market condition, I mean, this was an important news event before the current market conditions. But because we have the current market conditions right now, it's extra important, because this is what's right now driving the whole narrative, the whole risk on and risk off narrative. And of course, we also have the energy problem in EU, which most people like. When you look at speeches from policymakers in the EU, they're not going to say we're going to have inflation, because if they tell you that we're going to have an inflation, I mean, we're going to have a recession. If they say we're going to have a recession, we're already in a recession, because it's kind of like a self-fulfilling prophecy. If the European Central Bank comes out and say we're going to have a recession, well, everyone's all right. Let's have a recession. So you can't really trust them when they say we're not going to have a recession, or we have a chance of recovering from not having a recession. Looking at the current market conditions right now, I think it's fairly certain that we are going to have somewhat of recession in the EU, in Europe, because of the they have to prolong the hiking of rates, and we're going to have some problems with energy. So all of this combined, when looking at the chart, and I'm going to bring up some charts I'm looking at right here.
What way they maybe also could do is they play it like Biden, and just change the definition of recession, so you never have a recession.
Yeah, I mean, we've seen that at all as well, and I think it's a way for them to try to save it, right? Because they know that if they go out and say yes, we officially have a recession, that could also lead to a worse recession. Because if the Fed comes out and says, everyone should panic, everyone's going to panic. So this is the US dollar index, the DXY, and I've looked at this trend for a while, and I remember tweeting about this and saying, yes, Bitcoin is on the local, looking at the local structure, Bitcoin was fairly bullish. You had on the 4-hour, you had this starting, right? So on the local structure, the very local structure, if you isolate this, yes, Bitcoin was moving bullishly. And then you zoom out and you see this, and you compare that with the US dollar index, the Dixie. It's still in a very, very clear uptrend. And Bitcoin was performing bullishly here, just here, right? This down move was caused, because of a risk-on environment. The dollar was giving back some of its gains, which it usually does after a huge rally like we've seen last couple of weeks. And Bitcoin, of course, followed that risk-on narrative. Same with Bitcoin. Bitcoin printed this move right here. We had the S&P 500 had also a very nice move, which is pretty much exactly like Bitcoin, right? And what happened on the S&P 500, like so many times before, you come up and you test a high time frame resistance area, right? You test a high time frame resistance area, and that's the end of that. Because remember, you look at the this is also interesting. I like the fact that you came up and it almost perfectly hit that 618, like absolutely perfectly hit that 618, and that was the resistance. And at the same time as hitting that resistance, it's interesting because these resistance levels, they hit at the same time as the news event comes out. So even though that technicals do not drive the markets, it's such a good way of seeing, like, if the news event comes out negative for risk on assets, what levels should we be looking at to sell? And this was just, in hindsight, is the perfect level for a sell. So right now, what I'm seeing, like, what I've been talking about is, first of all, like, a major level for Bitcoin was this 21 or 21.5 to 22K area, this level right here, which I view as the middle of the range. So that for me was a major level that needed to get reclaimed, and it looked like it was about to happen yesterday, right? But so many times in the past, we've seen that when the market starts to become bullish, but it's not confirmed on the higher time frames, and at the same time you have a major news event, like, there's so many times that is like that last push before the negative news comes out. Like, it happens over and over again. And at this point right here, everyone's just very bullish. So if you have a small move, everyone's bullish, and you have a major news event, you can almost calculate and say, you know what, this bullish sentiment is probably going to be expensive for a lot of people. So I wanted to see a reclaim of the range EQ, the middle of the range, while the dollar currency index breaks below this level. If that happens, that would be for me a very clear signal that the dollar is losing strength. But all of this could not happen without inflation going down. That's just the mechanics of the markets right now. This is not going to happen until inflation goes down.
In terms of the dollar index, actually, things might speed up a little bit to the upside also. I mean, when we have the rate hike there next week, we have another 75 basis points more that makes it more attractive, to buy US Treasury bonds, which obviously you need US dollar for. That's why you have the demand for US dollar across all currencies. And so things might speed up there a little bit. And yeah, that's might be giving us this, hopefully, then last slump down in risk on assets.
Yeah, and I've seen a lot of people are the market is kind of pricing in a 100 basis point, like 1% hike, and I've seen that it seems like right now the most people or most institutions and most reports are talking about a 75 basis points. Basis point. Some are talking about a 50 basis point, but a growing number of people are now talking about a 100 basis point hike. I believe at the at the event or when they're going to be announcing the hike, I guess the expected number would be 75 basis point. So, and it's not going to be lower. It's
no, and I mean, if you remember, I think it was like 3 or 4 weeks only ago. It was like 70% probability that we are going to get 50 basis points, and only 30% that we are getting 75 basis points. Now it's for sure 75, and some people are even talking about 100 basis points now.
I think it's going to be 100, right? I think it's going to be 100 because you look at the inflation data now, it was unexpectedly high. So the hiking of rates might be unexpectedly high. And if the expected number is 75 and we get 100, that is going to be crazy volatility. That is going to be crazy volatility. I don't even know if they have raised hiked rates that high.
I cannot remember.
Very, very long time. Like 100 basis points for the Fed is insane. And the strength of the dollar, I mean, that is probably going to be what causes this to really break out. I mean, because that's really how it works, right? If the news event comes out and it's lower than expected or higher than expected, that's when we get the big moves. I mean, you can look at the S&P 500 here. Like this is a pretty big move. This is a very, very big move. And like you said, you look at Euro USD, not Euro USD and Bitstamp. Why as crypto should be that one. I mean, this is a major moves, and this is what you get when it's unexpected, right? When it's unexpected.
Yeah, absolutely. Yeah.
I see that you had the Ethereum merge.
Because I saw a question what our take is on the ETH merge, and I mean it's coming up basically tomorrow. Not basically, long awaited. It's finally coming up. For me, it's kind of a shame, that we have to have this merge kind of at the worst possible time when it comes to market sentiment. Like we're in a super bear market, especially after yesterday. Now everybody's pessimistic again, including us a little bit. And now this one is coming, but I mean, it's finally coming, has been delayed for quite some time now. I'm very sure if we would maybe, put the clock back by 1 year, we would be now in September 2021, and this would be super, super bullish. Sure. If it's going to have a big impact really on Ethereum, short term, I doubt it, honestly speaking, because I think we would have seen that impact already. Normally,
well, I think we've already seen it. I think this last. I mean, a lot of people talked about this latest move being because of the Ethereum merge, which is absolutely not true. Everything moved. But I think that might have been it. I think this is going to be a sell the news event. We sell the news.
I mean, looking back probably at it at one time, it's going to be this like, okay, is the future now proof of stake, or is the future proof of work when I talk in general about cryptocurrencies? So what we had back then with these block size wars in 2000, and I think it was 16, 17, when you had the fork of Bitcoin Cash from Bitcoin, is probably this is the new war now of our age and of our day and time, proof of stake or proof of work. And I mean, by all means, Ethereum has to prove now that a cryptocurrency that large can sufficiently work on proof of stake. I honestly speaking have my doubts. I'm not a big fan of proof of stake, so I'm not buying any Ethereum at the moment.
My thoughts are, well, first of all, I'm not an expert when it comes to different blockchains and proof of work and proof of stakes blockchains, but I do honestly think it makes more sense to have proof of work. I am if I had to choose one cryptocurrency if I could only choose one cryptocurrency in my portfolio, it would be Bitcoin and not Ethereum for for a simple reason that Bitcoin. I mean, there's a lot of things to be said about Ethereum, but Bitcoin is Bitcoin. It's always going to be Bitcoin, and it's just such a beautiful thing. And I think proof of stake has its flaws, absolutely. It has its use cases as well, and it's very interesting that we now have one major proof of work coin and one proof of stake coin. It's going to be very interesting, and I think it's important for the industry as well to have this, to really see what's happening and how will this affect the overall crypto market. And it's a real shame that the Ethereum merge is happening in the worst possible scenario. Like, it couldn't be worse than this. I mean, we have a war in Europe, we're going to have recession worldwide, most likely, we have energy crisis. Nobody gives a shit about cryptocurrencies, right? But then again, a lot of people would argue that this is a great buying opportunity, right? A lot of things are happening in the crypto space. Yeah, sure, it might be, but you cannot buy Ethereum just because there's a merge, right? You have to take into consideration that Ethereum, just like Bitcoin, is a risk-on asset. It's a risk asset, and it's more riskier than Bitcoin, most likely. And in current environments, you have to be careful. So I know a lot of people watching this are crypto traders, like 100% crypto traders. They don't care much about the legacy markets, the forex market, the stock market, or whatever. But you have to understand that fundamental news and macro happenings around the world is driving a very clear narrative, and it's between risk on or risk off, and crypto is in the risk on basket, the risk basket. So you have to understand that whatever drives the balance between risk on and risk off will affect the crypto market, whether you like it or not. So yeah, the Ethereum merge will would most likely have caused an explosion in price, and I really mean an explosion in price during bull markets. So yeah, it's going to be tough for Ethereum to really create something big of this in terms of price action, I believe.
On the other hand, also good, that the core developers, they are not considering things like, oh, is this a good environment at the moment for something like this, or not price-wise. So the price really does not go into the consideration of technical updates. And I think that's something good, if you as a developer are not influenced by something like this. For sure, I mean, if we look in the past, Ethereum tends to perform worse in bear markets than Bitcoin, but it also tends to perform better in bull markets than Bitcoin. We have to be fair. For me, it's just, a personal thing. I see a lot of things coming in motion now for Bitcoin as well in terms of development. I'm looking there at Taro, for example, which, if things go well, is going to allow smart contracts on Bitcoin on the Lightning network. So if that really works the way it is intended, that basically would mean that every altcoin out there is becoming worthless overnight. And I wouldn't be surprised if we see something like this developing over the next years. Then again, 4 years ago, everybody was already talking about, Lightning Network for Bitcoin. It's going to be the big thing, but it took off, but not to the extent everybody was expecting. So, excuse me, it's of course very hard to determine technical updates like this. What effect are they going to have, at least short term, on the price? Long term, it's going to have an effect. Is this a good price now to buy Ethereum? I don't know. I personally am sitting still on a pile of cash that as I also said in the past, that I'm slowly transitioning back into risk-on assets like stocks, like cryptocurrencies. If what I'm expecting now, this double low there, the soft landing and the S&P 500 really becomes true, then probably by December, I will shift my whole cash back into risk-on assets. This is my game plan at the moment. I hope, of course, that no war, no energy crisis, no new plague coming out or new strain of COVID or, whatever the world has a nasty surprises for us always is going to interfere with that.
Yeah, I do like the idea of December, January giving us something, and I mean, I guess for for the sake of that narrative, I do believe that a 100 basis point raise might be good, because even though that it would short term be very, it's going to hurt the markets, and it's probably going to deepen the swings to the downside. I still think that, I mean, technically, the higher they raise hikes, it shows that they're more serious about fixing inflation, and that might be what's needed. I don't know, but I mean, looking at the Ethereum chart on the high time frames, yes, it has gone down quite a lot, and I would say from the peak, it's down.
You want to switch to your chart maybe quickly?
Yeah, I mean, from the peak, I haven't really done any proper TA on this, but from the peak to this bottom, that's 80%. That's crazy. I mean, that's the levels where you want to be a buyer. But the problem is that a 90% move is also not uncommon in major bear markets like this. It would absolutely not surprise me to see Ethereum drop even lower. There's nothing that tells me that it cannot drop to these levels, especially if we're going to have a prolonged bear market. Now, we're talking about December, right? So if you look at the monthly chart, you see quite clearly how far down 1 month of price action can go. We have a couple of months left till December, right? So even if we just get one move like this, just one move like that, we're down at that level. So looking at the behavior of this trend and the momentum of these moves, I mean, most of these monthly bearish candles, they are of the same size. So it would not be weird to expect, one small bearish candle, one small bullish candle, then boom, one strong, bearish candle. And if the S&P 500, I mean, you gotta look at everything at once, right? So if the S&P 500 is going to create a new low, let's see. And if the S&P 500, I think I have a high time show. Let me bring up another S&P. So I got this chart. This is like the worst scenario, I believe. I want to show something. I just think this is beautiful. This is just beautiful. Look at this. I find it so funny that this happens so many times. The power of the 0.618 fib. You see how it bounced on the 618 here and then went up and got rejected on the 0.618 right here. I think it's just such a beautiful coincidence that this happens just over and over again. You're probably going to see it here as well. Well, almost, but it hit the reload zone here. So I don't know. Like every time I see this, I think it just works out so many times. It's crazy. It's crazy how well technical analysis actually works sometimes, and how often it works out. So this is a chart that I've been watching, and if we're gonna have a crisis, so this is the 2008 financial crisis. We are not at that shock. We haven't had the shock that we had in 2008. Everything is moving quite slowly in current conditions. We're getting information and developments are happening quite slowly. It's not like, there's a major shock to the system. So if we do get a major shock to the system, and it's going to be much worse than we think, and it's going to be, everyone's just going to be surprised. If we have like a crisis, a financial crisis, it's not impossible. It's not impossible. I mean, to have a move down here. It's like 2K. It's a 60% move. It's like in the financial crisis of 2018. It's not impossible. However, I think it's more probable that we're going to hit this level right here, which is, so this high time frame fib right here down here is measured from that low to this high. And this fib is measured, I believe, from this low to that high. And this seems much more probable. I don't know where you had, at what price did you have your potential?
Between 3.4 and 3.6. What I call the soft landing.
3.6. Yeah, so this is it's right here, and that would be the 50%, which is also a very common level to hit. So that's going to be the 50. So the 50 is going to be at 3.5, so around the 50, which also we see quite often that we have a strong reaction between the 0.618 and the 50. So I guess we could roughly say, if we have a so-called soft landing, it would be somewhere here. And if we have a more prolonged bear market, it can be anywhere down here. But even if we hit this level or this level, imagine what Bitcoin is going to look like. All right? Imagine, because Bitcoin is going to create a new low as well, right? There's no question about it. Bitcoin is going to create a new low if the S&P 500 does. Now, is it going to drop down here? Probably lower. It's probably going to go lower, because what the S&P 500 does, Bitcoin does faster and bigger and more extreme.
Yeah.
So, we might actually come down here, which is technically a very sound level, right? But it's scary. It really is scary, because now we're starting talking about the 14K all the way down to 10K area. But looking at the chart and looking at the behavior of this trend, it's actually quite probable that we are going to see a move down here. And this move here, in relationship to this move and this move, is very small, right? That's what I'm saying. It's very small in relationship to the current trend. So is it possible? Yes, it's very possible. Do I think it's likely? No, but I didn't really think it was very likely to see a move down here either. And then you look at you look at Ethereum, right? So now you look at Ethereum.
Just very quickly there, maybe, and this narrative, actually, in my opinion, also fits in what I've been reading, also by a lot of analysts, saying like, we are still missing this final capitulation event, where like everybody really becomes like super bearish, this like f dot this shit, and my English, and I'm out of here. I cannot see it anymore. I never want to see cryptocurrencies again. I never want to see stocks again, and so on and so forth. So maybe this is the price where this capitulation event will be triggered, and that for sure is then going to be the bottom.
Yeah, I'm gonna show you a couple of charts I'm watching. Let's see. Do we have? I'm looking for the unrealized, the net unrealized profit and loss right there. And we're going to look at the MVRVC score. So the capitulation, right? So where are we going to see capitulation? So in my opinion, capitulation will happen most likely when we're trading inside this green zone right here. Now look at the last bottoms, right? So first of all, it's important to remember that you cannot only view this this MVRVC score chart as only horizontal levels, because there is always going to be a degree of alpha decay. And basically what that means is the alpha decay in this chart would be that the bottoms are going to be higher and higher and higher. Now we can ignore that because that is a COVID crash, and I would just, most of the time when I'm doing in my analysis, the COVID crash is just once in a lifetime. It's not easy to use that in your analysis. That is like a major shock to the system. But anyway, the bottoms are slightly get a little bit higher, but you can still see that we're right now here at the top of the channel. It's very likely that we do drop lower to the low of this channel, and you look at the net unrealized profit and loss. We're not in the capitulation phase anymore. We have actually went down and then up, and the same thing goes for this with the alpha decay. Like you have a higher bottoms, right? This is the COVID, so you can see like there's some kind of diagonal here, but there's still room to the downside. There's still definitely room to the downside, and yeah, I do think that a lot of people they're kind of pricing in everything that's happening. And I do believe that a lot of people are well positioned for what's to come, because the stuff that we're talking about now, everyone's talking about it, right? Everyone's talking about this. Everyone knows that we're in a bear market. We're going to go down. They're going to raise high. They're going to hike rates. Inflation is not going to go down tomorrow. Everyone knows this. It's like super clear. Very few people can find bullish things about the markets right now, which tells me that they're well positioned for it. They have, they're on the sidelines in cash if they haven't lost it already. And that, in my head, doesn't really make a lot of sense for us to just safely put in the bottom, right? We need people to start buying.
Yeah.
Right. We need a majority of retail to start buying, and we need them to capitulate, and we need the long-term holders of Bitcoin to start selling. Right. We need the big players in the crypto space, like the big whales. We need some of them to say, you know what, I'm out of here. This is not going to end well. I sell here. So what I'm looking for is not only retail capitulation. I'm looking for like major long-term holders to capitulate. And I think when we get that, we might have that major move to the downside. And I'm looking for like a weekly candle that kind of looks like this, is maybe like even a wick down here, and then it closes up here. Like that. I mean, I'm not saying we're going to go down to 6K. I mean, saying that I want it to look something like that, like a insanely strong candle and with a big wick. And then it's like, all right, I'm out. I'm out now. And I think we need that, right? I honestly thought that this was capitulation.
Yeah.
First.
Yeah.
But then, because you look at the daily chart, and you'll see that I did think that this was like the capitulation phase. But then when looking at the MVRVC score and the net unrealized profit and loss, I had a feeling that, you know what, if we bounce here, we probably need to see something more major. So it's obviously very hard to try to predict these things, and that's why I'm always trying to tell people that instead of trying to look, and it's an interesting way of putting it, but instead of looking at levels below, you should look at levels above, right? So what levels needs to be reclaimed, right, for there to be strength in the markets, right? And we can drop. I mean, technically, it's possible for Bitcoin to drop to zero. It is. I mean, we can't deny that. It's possible, technically, to drop to zero. So we can continue looking at levels lower and lower and lower and lower and say, this looks like a good level, and now this looks like a good level. But what I think is more important is, but what level needs to be reclaimed above current price for there to be strength, right? And when you see that clear confirmation of strength, which is basically, very simply put, a break in market structure, you can start thinking about maybe now it's time to enter the market, because now the bottom is obvious. So imagine if the next CPI data comes out and inflation has clearly peaked. It's lower than expected, right? It's lower than expected. The Fed comes out and says we're going to continue hiking rates, but we're not going to do so at such a strong pace as we've done in the past. And with that, you have this, right? Now, on the higher time frames, for me, this would be absolutely obvious that I'm going to take the risk here of this being the high time frame bottom, right? When the current macroeconomics are changing and the Fed goes out and calms down and inflation has peaked, and you see a very clear bullish break in market structure, I think this is the most easiest way for new traders coming into this market to actually get in as early as possible. Because if you try to time the bottom, you're going to be buying here, 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 and here, and you're going to sell everything here, right?
Very likely. That would be the typical behavior, especially for a beginner trader. I mean, on the other hand, of course, you cannot time the bottom. if you are in like for the long game, if you are like me, a strong believer that Bitcoin is still going to be around in 30 or 50 years, it doesn't really matter where you buy.
Yeah.
I mean, I'm not saying like, buy in the super bull market when everybody's euphoric, but in bearish times like this, it's totally okay. When you start stacking up slowly, you bought some at 25,000, some at 20. Maybe you were lucky you bought at 17,500, or last week at 18,500 US dollar. Maybe you get the chance now to buy some at 15, maybe even at 10. In the long run, it doesn't really matter, and it gives you the ease of mind. Or the peace of mind, it's called, that you really don't need to worry about where's the bottom. Maybe if you're really in for the long term, even do not look at the prices every day. Don't go crazy because of some daily candles or 1 hour candles or half hour candles. If you are more on the swing trading side, times like this offer a great chance, in my opinion, to widen your horizon already. The world is not just cryptocurrencies. There are other asset classes out there that you can trade. And I mean, we've been showing you here really over the last months already what influences crypto. That crypto, especially in a downtrend, is highly influenced by the stock market, especially the NASDAQ and the S&P 500. That we have correlations there to the US dollar index, that you can see those trends also in single currencies like euro, US dollar, for example. So those are trades you can also take. You don't always need to do everything in crypto when crypto is behaving like a derivative of another asset class at the moment, speak the stock market. So you can also trade the stock market directly then. There are great opportunities always waiting. And then when you have a feeling, okay, now we are at capitulation, and in the upcoming uptrend again, in the new bull market, for sure, Bitcoin cryptocurrencies are going to have a life of their own again, where they decouple from what the stocks are doing, from what the US dollar is doing. Then you can come back and concentrate more on a daily level, on a swing trading level, also on trading cryptocurrencies. Widen your horizon.
That is a great point. Great point. I think when crypto is really going in a downtrend like it's doing right now, it's in current market conditions, it's not easy to trade crypto. Like, I gotta be honest, I'm trading Forex much more active than I'm trading crypto. And I just want to comment like what you said on basically you talked about like some type of dollar cost average strategy before. And what I'm showing here on the chart is basically I always recommend I don't recommend anything, it's not financial advice obviously, but what I would do if I would be new in trading is I would apply a dollar cost average strategy where I'm buying small amounts on a weekly or monthly basis. And if this prints while I'm still 50% in cash, so let's say you've only entered the market with 50% of your desired position, and then this prints, now you can start thinking about adding that last 50%, right? So you might have bought here, and then you start buying here, and you get this. Well, you don't want to buy like this, right? You might want to start putting all of these buys in here. And you have like an average entry of here. Now, yes, if it's going to dump, that's too bad, but at that point, when you enter with everything, you should then start thinking about an exit strategy, of course. All right. It's been 50 minutes, and I think we have covered quite a lot here. And I think it's very important that people new in the game here understand the impact of news events like CPI, and more importantly, that you should not be trading or in any open positions during those news events. As you've seen, we don't know the outcome, and the volatility can be quite extreme.
Absolutely. Or if you do, for example, on my Telegram channel, on our Academy Telegram channel yesterday, I actually entered a long position in the S&P 500 before the release, but I also said, guys, be ready if the numbers are less positive than expected. be sure to close this really quickly because we're going to see a really dump then, which was wise. Of course, this trade cost some money, but still I was able to exit the market at levels well above what we are seeing right now on the stock market. I even got, that was really interesting and very motivating for me, a text message from a student of the PrimeXBT Trading Academy who said, like, I've been reading your Telegram channel. I love what I'm reading there. I was following your narrative. And after the bad data yesterday came out, I closed my long and I immediately switched to a short trade. And I was like very proud when I read this because I thought, yes, this person understood that you cannot be married to a position. He adapted his position to the new reality. And this is really when you've reached that level of confidence that you can make these decisions on your own, then you've done it. Then you've gone 80% of the way already.
Yeah, that's beautiful. That's absolutely beautiful. And if you guys remember to follow Dirk, he's on PrimeXBT Academy on YouTube and Twitter. And like he said, he has a new Telegram channel, which is very useful for new traders. So definitely check that out. And as some of you guys might know, I'm launching my new trading program starting on Monday. So if you're interested in that, you could send me a DM on Twitter, and I will get back to you with some details on that if you're interested. So it's only 12 spots. I have a few spots left open. So if you're interested in that, let me know, and I will give you some information. All right, Dirk.
All righty.
Thanks for joining today, and thanks everyone for watching. It's been a pleasure as always talking about the markets with you and getting to know what your plans are. And I'm looking forward to the next one to see if we are on track.
Me too.
And
we're going to have that interest rate decision, I think, in the meantime. So there's going to be plenty of stuff to talk about again. And yeah, I hope we could show you, what our main hypothesis is at the moment and what we think the markets could do in the next couple of weeks and months.
We also have a comment here. What is Dirk Telegram? So where can we find that?
Just if you check out the PrimeXBT Trading Academy, our YouTube channel, you'll find a link to the Telegram channel in the description of every video there.
All right, perfect. All right, that's it, guys. Thanks for joining, and I'll see you guys in the next one. Take care, and like Dirk always says, remember to use his stop loss.
Absolutely. Take care, everybody. Bye-bye.
Take care.